We all know that Dangote Cement is a dominant force in the African cement industry. But how dominant exactly? What factors have fueled this rise? In this episode, we dive into the key elements behind Dangote Cement dominance. From strategic market moves to navigating complex challenges. Let's start. Dangote Cement is a key subsidiary of Dangote Industries, a conglomerate founded by Aliko Dangote in 1981. Dangote Industries originally started as a trading business, focused on importing bagged cement along with other staple goods like rice, sugar, flour, and salt. During the 1990s, the business made a significant shift from trading to manufacturing, setting the stage for what would become Africa's largest cement producer. One turning point came in the year 2000 when Dangote Industries acquired the Benue Cement Company, followed by the purchase of Obajana Cement in 2002. Construction of the first major cement production plant began in 2004. By 2007, the facility had expanded to include 2 production lines, with a capacity of 5 million tons per year, making it the largest cement plant in sub-Saharan Africa at the time. In 2010, the Obajana operation was officially rebranded as Dangote Cement. That same year, the company merged with Benue Cement Company and was listed on the Nigerian Stock Exchange, marking a milestone in its growth. From there, the company embarked on an aggressive expansion strategy, rapidly scaling its operations across Africa. Dangote Cement's business model is built around a fully integrated approach. The company controls the entire supply chain, from the extraction of raw materials to the production and distribution of cement. Owning its own limestone quarries and production plants allows Dangote Cement to manage costs efficiently while maintaining strict quality control throughout the process. Beyond Nigeria, the company has strategically expanded into other key African markets. This diversification reduces market risk and taps into the continent's rising demand for construction materials. Dangote Cement collaborates tightly with governments and international firms to enhance its operational capabilities. While cement is the company's core product, it also produces clinker. There are plans to diversify further into related construction materials. A robust distribution network with depots across Nigeria and several African countries supports this model. This network ensures that products reach a broad range of customers, from individual buyers to large construction firms. Dangote Cement generates value through vertical integration, which not only reduces reliance on external suppliers, but also improves cost management. This integrated model allows the company to capture a significant share of the growing construction materials market in Africa, helping to shield itself against economic volatility in specific regions. The Nigerian cement market is largely dominated by 3 major players: Dangote Cement, BUA Cement, and Lafarge Africa. As of 2024, Dangote Cement holds a commanding market share of around 60%. Beyond these main competitors, several other players contribute to the industry. Stallion Group, a diversified conglomerate involved in multiple sectors, including cement manufacturing, with several plants in Nigeria and West Africa. Heidelberg Cement, an international company with a presence in multiple African countries. These competitors are continually investing in expanding their production capacities to meet the increasing demand fueled by Nigeria's construction sector. The need for cement is driven by infrastructure projects, urbanization, and housing development. Price competition plays a critical role in this market. Given the high price sensitivity in Nigeria, cement companies often adjust their pricing strategies to remain competitive. Dangote Cement, being the largest producer in Africa, has a significant influence on market pricing. Its pricing decisions typically set the standard for the rest of the industry, pushing competitors to follow suit. The Nigerian cement industry faces significant challenges, primarily high production costs, driven by rising energy prices and logistics expenses. Over the past 3 years, cement prices have reportedly doubled due to inflation and increasing operational costs. These price hikes have led to government's intervention. High cement costs could slow down critical infrastructure development. Demand for cement in Nigeria is also influenced by seasonal trends. Prices tend to rise during the dry season, when construction activity is at its peak. The country's substantial infrastructure gap presents a significant growth opportunity for cement producers. Dangote Cement plays a critical role in meeting cement demand across Africa, particularly in Nigeria. The company's flagship plant in Obajana is the largest in Africa. It is a key part of its operations, significantly boosting cement supply both within Nigeria and in neighboring countries. Dangote Cement's total production capacity stands at 52 million tons per year. This capacity is distributed across multiple plants in several African countries. Here's a breakdown. Within Nigeria, there are currently 4 plants that produces over 35 million tons per year. The Obajana plant with 16 million tons. The Ibeza plant with 12 million tons. The Geboko plant with 4 million tons. And the Okpela plant with 3 million tons. The other African plants combined account for more than 16 million tons per year. Tanzania with 3 million tons. South Africa with 2.8 million tons. Ethiopia with 2.5 million tons. Ghana with 2 million tons, including clinker grinding and import. Cameroon with 1.5 million tons, including clinker grinding. Congo with 1.5 million tons. Senegal with 1.5 million tons. Zambia with 1.5 million tons. And Sierra Leone with 500,000 tons, including import. This extensive production network enables Dangote Cement to meet local and regional demand while supporting its export strategy. In 2023, Dangote Cement reported a revenue of $1.3 billion, a significant 36% increase from the previous year. This growth highlights the company's ability to efficiently capture demand in all of its markets. The consistent rise in revenue is driven by expanded production capacity, higher sales volumes, and strategic price adjustments. Dangote Cement's profitability remains strong. Profit after tax grew by 19%, reaching more than $300 million in 2023. The company's earnings per share stood at 26.5 naira, highlighting solid returns for shareholders. Cash flow from operations was $482 million in 2023, an increase of more than 18%. The company's liquidity is bolstered by its ability to maintain consistent cash reserves and quickly convert assets into cash as needed. In late 2022, the Obajana cement plant, Dangote's largest, has been at the center of a major ownership and taxes dispute. The Kogi state government, where the plant operates, claims it owns a stake in the plant, but Dangote Cement maintains that it legally owns the plant. This conflict will be covered in depth in another episode. Looking ahead, Dangote Cement is pursuing an ambitious expansion strategy centered on both geographic growth and product diversification. The company is constructing a 6 million tons a year integrated cement plant in Ogun State, Nigeria. This facility aims to boost local production capacity and enhance Nigeria's cement export capabilities. Additional plants are planned for Côte d'Ivoire, Niger, Benin, and Togo. Beyond Africa, Dangote Cement has its sights set on markets like Iraq and Myanmar, with plans for new facilities to be developed soon. Dangote cements its position as Africa's leading cement producer thanks to its extensive production capacity, strategic market presence, and strong financial performance. Its proven ability to navigate regulatory environments, manage costs, and leverage economies of scale will play a pivotal role in shaping its future success.